This happens to be lesson number 14 of audit and assurance. That is the intermediate one, and of course the advanced one. Yeah, for ACCA, for CPA, feel free to be in this session. My name is Dr. Aura, and I'm privileged to be the one taking you through today's session, which basically is all about internal control systems. Remember, ladies and gentlemen, as an organization, you will always need to put in place what we call effective internal control systems. Have your internal control systems designed very well. The design must be perfect. Yeah. And then, of course, most importantly, it should be operating effectively. If you don't have these measures, these controls that you are putting in place to ensure that your assets are safeguarded, your financial reporting is excellent, then just generally know that most of these employees, most of these stakeholders will be coming to their workplaces every morning. Some of them, not all of them, but of course many, will be coming to their workplaces every morning with an intention of stealing. With the intention of stealing. So that if you don't protect your organization from these vultures, then automatically you'll get yourself into problems. So remember then, you as an auditor, of course, you'll not be the one who is going to design and put in place internal control systems. Ours is to understand. We as an auditor, we are called upon by the International Standards on Auditing, ISAs, to understand the controls, to understand these internal controls. Just a quick reminder, ladies and gentlemen, of what we did in our last class. The auditor's responsibility, that is lecture 14, purchase cycle, risk control and test procedures. So auditor's responsibility regarding internal controls is to understand the entity's internal control system over financial reporting, e.g. purchasing process. Then number two, as we understand, whatever we understand, we shall always document. Yeah, so the understanding shall be documented, typically through narratives, flowcharts, or what we call walkthroughs. We shall be able to document what we understand. So you have come in this case here to a college like RCM, and you've told us that you have a control system of putting a guard, of putting a soldier at the gate. A soldier will be able to ensure that the students who go to class have paid their fees. Yeah, so I'll be able to document that system that you have in place. After that, then we evaluate the design. Was the architectural design, right? Was the design of the identified controls to assess whether they are capable of preventing, detecting, or correcting material misstatements. We must evaluate that design. And then now, once we are comfortable that the design is okay, then now we go and look at the operational effectiveness. You test the operating effectiveness of controls. If the auditor intends to rely on them to reduce substantive procedures, note, you cannot audit what you don't understand. You cannot assess risks, improvements, or test controls without fully grasping the process. Always remember these 4 steps pertaining to internal control systems. Now, for us to be able to tackle our today's topic, and today's topic, you're looking at something that I really love called purchasing cycle. Yeah, lecture number 14 is about the purchasing cycle. So, overview of the purchase to pay, what they normally call P2P cycle. The purchase cycle, also called P2P, covers the flow of transactions from when the need to acquire the raw materials to purchase is identified, from the time that need is identified to the payment to the supplier. So below are the key steps and the documents that you need. I've been able to put this down in form of what here, in form of a great pictorial presentation. When there is a need to purchase, somebody from the department has said, hey, I need these photocopying papers. Yeah, so in this case, of course, you will ask them to put down their request. Yeah, just put down your request, because big organizations, we don't work with just mere talks. Yeah, we always require documentations. So in this case here, we shall raise what we call a purchase requisition note. Now, after that, ladies and gentlemen, then now we think of, purchasing through the procurement. We shall be able to call upon tenderers to ask, in this case, they give us quotes. And then, of course, now we place an order. So we shall be able to see that under purchasing, we shall place an order. When we place an order, of course, this person will not deliver like immediately. It may take 3-4 days to bring this to our farm, so that we shall be able to have a receiving procedure here. We receive. Once we receive, what happens? Of course, in this case here, we shall be given an invoice which is a request document for payment. Then we go ahead and pay. And I've been able to summarize the same, ladies and gentlemen, on this table where we have the key steps: need identification, we place an order, goods are received, and then we get an invoice. We must be having a section where we pay yes. So you can see need identification, department requests an item. Which key document do we expect from the department which is requesting? It is a purchase requisition. Of course, the procurement manager will help them to put up this. Order placement. So when you place an order, then you have been able to formally order the item. Yeah, that is the description. And what is the document? Because in audit, even in these organizations, we always prefer working with documentations. So then we have the purchase order. Yeah. Now, after the order placement, we receive the goods. Goods are received and, most importantly, recorded. Recorded in which document? Goods received note. Then now we are comfortably having someone else's goods in our company. Now they have come to our control in our warehouse. So then we expect here to seal everything by paying. To be able to pay, we need a document. So invoice receipt, we're given an invoice. So supplier sends invoice for the goods. Very good. The key document here will be the supplier's invoice, which you shall be able to go ahead and honor. So 5, the last stage, is payment. Payment is made to the supplier. And then, of course, the key document here will be the bank voucher or just a payment document. There must be a document to prove that, hey, we have paid. Because, ladies and gentlemen, please listen. When in this case here, we want to even take the check round for signatures to be collected from the various signatories, you can just walk around with just the check, blank check that's signed here. No, we would need, in this case here, what we call a payment voucher. Underneath it, we need the support document, which in this case here will be what here? The supplier's invoice. Yeah, and then you attach a check to move around with it. There must be a document. When you're coming to pay, there shall be a document. All right, ladies and gentlemen, then we continue here. Accounting entries. I love this. This I'll have to check as an auditor. But now remember, these accounting entries are being done by who? By the company. So the most important in all these stages, you see here, it was just a need. Here you placed an order. Our liability to pay, our accounting process will start from note number 3, from stage 3. Once we receive the goods, then now we call in the accountant. Otherwise, these two are prerogatives of who? The procurement manager. Yeah. So in this case, here we start making our accounting journals here from stage number 3. And I've been able to do a note for the same for you here. Accounting entries begin from the goods received stage or goods receipt stage, because the entity has received value and now incurred an obligation through accrual, even if you haven't paid for them. So we know that the accountant has to accrue, has to accept this liability and then pay later. So when we receive these goods, ladies and gentlemen, what are we supposed to do? When I receive these goods, depending on what is being received, if I've received goods that I'm going to be reselling, yeah, so those ones, of course, they can be taken to purchases directly. Yeah. So in this case here, we debit purchases and then we credit accruals. Yeah, because we haven't paid yet. Yeah. If, for example, you have bought an item of consumables, all right, consumables. So consumables, of course, these are like photocopying papers, etc. This is supposed to be expensed directly. Yeah. So in this case, you shall come and debit. You can have a special ledger for the it's always good to have individual item ledgers. Yeah. So in this case, you can come and debit the consumables account. And then, of course, you credit what here? You credit, in this case here, straight away the accrual. Yeah. Or if, for example, these things were given to you by a specific person that you know, you can also realize, or rather, you can also credit the account payable. The account payable. Please listen. So when I receive the goods, here I will be able to debit inventory. I'm just putting this for the sake, otherwise we don't open inventory account. So the inventory here would be like the purchases, it would be like the consumables account, or we basically would debit this as an expenditure. And then you credit accruals. So you as an accountant, which document are you using to support a journal? Journals must be supported. All right. So in this case, it is the goods received note. All right. Then you receive an invoice. This accruals account, of course, has to be closed. Yeah, this basically is a transient account. It must be closed like almost immediately. Yeah, because once you receive, in this case here, an invoice, now you know the person to pay. So you know the account payable. Or if it is purchases, you know you're going to credit trade payables. All right. So in this case, you close this accruals account by debiting it, and then you credit trade payables. All right. Of course, and then of course you credit what here? You credit the bank. You credit the bank. So these are things that I will really be singing about as we progress. Ladies and gentlemen, remember, an auditor must always be a good accountant. That is why even, for example, all over globally, you first become an accountant before you become an auditor. Because you are coming to audit, to review work done by experienced accountants. All right. That is why if you're an auditor, you must be very good with those journals, which I'll be able to teach you very good shortcuts. We normally call this one the concept of PEARLS. PEARLS is P-E-A, then stroke, R-L-S, P-E-A, purchases, expenses, assets, those three. Whenever we purchase, whenever we have an expenditure, whenever we acquire an asset, we debit. So those three, debit. And then we have R, L, and S, revenue, liabilities, share capital. Those ones, you shall always credit them whenever they increase. Yeah, I repeat, R, L, S, revenue, liabilities, and share capital. Whenever they increase, you credit. Like trade payable is a liability. Whenever it increased, we credited. We debited purchases, whatever. And then, of course, if you know the person was supplied, then we have here the account payable credited. When we pay, the liability is reducing, so you debit it. We shall be able to follow this very easily. I'm never worried about double entry. You know, so many students fail in these audit papers simply because they don't understand the process. That is why I started by reading for you the purchasing cycle steps. Once you understand them and you know the documents involved, then you will end up getting all the marks without really cramming. And my way of teaching, I don't want to leave any stone unturned. I would want a situation where you go to your class, to your exam, and you are able to do what you have to smile. So audit evaluation framework, it is per sub process. Auditors should always analyze internal controls using the 5-column approach, using the 5-column approach. What is the process? Yeah, the process. For example, are we at need identification? What is the risk involved? What is the key control objective there? What is the control action, or what is the control activity? And then now as an auditor, come and test the controls. Come and test the controls. So I start with sub-process 1, need identification. So the process here is need identification. Risk, what could go wrong? Ladies and gentlemen, what could go wrong whenever, in this case here, ladies and gentlemen, we are trying to capture the needs brought to us by the various departments that are making requests, there is a very, very high probability, a very high risk that I may capture the need wrongly. I may capture the need wrongly. There is another risk that this particular person who is making the request, the procurement request, we may end up procuring goods for personal use. Perhaps the institution does not need this commodity. That's a risk. Remember, risk means what here? What can go wrong? What can go wrong in this particular process? So the risk, purchase requisition raised for non-business reasons. Approved, in this case here, PR omitted from processing. That we have in this case here a purchase requisition that has been omitted. Yeah, a purchase requisition that has been omitted. And that is why, ladies and gentlemen, all purchase requisitions, all accounting documents shall be sequentially pre-numbered. Pre, meaning that those numbers exist. As I even write on it, the number exists. All right. So what is the control? Why should we have a control process here? The control objective is to ensure that all requisitions are valid and processed. They are valid for purposes of procuring items needed by the organization, not you as individuals. The control activity, ladies and gentlemen, here, the purchase requisition must be authorized by the manager. The procurement manager should be able to do what here to sign. Actually, like ourselves, what we recommend, not procurement manager alone, from the manager of the department. The departmental managers should be able to sign. Who requisitioned this? It is this and this and this. So that person should be able to sign. And if they are doing it from the whole department, then this manager, procurement manager now, has also to sign. Either way, at the end of the day, the procurement manager should sign. Remember, ladies and gentlemen, for control purposes, the more the signatures you have on documents, the better. The more the signatures you have on documents, the better, because it means that you have various layers of a high-level review. You have a high review procedures, which is very, very good. So the control objective is to ensure that all requisitions are valid and processed. Control activity, the purchase requisition must be authorized by a manager. Purchase requisitions must be sequentially pre-numbered. Yeah, and then now we come, now the accountants and people in the organization, now they have finished their part. Now they have called this auditing firm by the name of Aura and Co. So now I'm coming to check the design of these controls and test the effectiveness. Are they okay? Are they okay? So the test procedure by the auditor is one. So what do I do on a sample basis? I will sample purchase requisitions for evidence of approval. That is really, really important. Those signatures, are they there? And then I will check sequence for completeness. For completeness. Then now we go to sub process 2. We have now gotten the need has been identified. We need this particular item. Approval process has gone through. In this case here, a PR, purchase requisition, has been raised. Now straight away, we go to ordering system now. So sub process 2, order placement. So when we are placing these orders, and gentlemen, in this case here, what could go wrong? So many things can go wrong. So many things can go wrong when we are raising this purchase order. So many things can go wrong. For example, we can even have this purchase order going to a wrong supplier. We can requisition, we can order wrong quantities. We can order, or rather get it wrong in terms of the items ordered. I mean, in terms of quality, there are so many things that can go wrong. We can even misplace a purchase order. So many things can go wrong when ordering. Remember, when you are told here to discuss the risk, you shall always look at what can go wrong. What can go wrong? So the risk, purchase orders raised without approved purchase requisitions. Yeah, you just call somebody, like this happens in the government. You just call somebody, you don't have a local purchase order, you don't have a purchase order, you tell this person just pre. So this is a risk. So purchase orders raised without approved purchase requisitions. The other risk is omissions of these purchase orders because they have not been sequentially numbered. All right. There's another risk that the supplier receives a wrong order. So of course, control objective, the control goal will be to ensure that we get everything in terms of ordering correctly, to ensure only approved requisitions lead to orders, to ensure supplier understands the order correctly. Control activity, the control activity, what do we have there as control activities as a firm? Purchase orders must be sequentially numbered and attached to the relevant purchase requisitions. Yeah, supplier must confirm orders in writing. Yeah, you've received, in this case here, our order 2. Basically tell us that you have understood exactly what we have requested from you. Please confirm you have received the order and confirm that you have understood our instructions on email. Through these email correspondences, we may easily be able to arrest a situation. And then now, as an auditor, I come. So as an auditor, the moment I understand the documents needed, those are the documents I'll be asking for. Please give me the purchase orders on a sample basis, not all of them. Yeah, on a sample basis, depending on materiality, give me this purchase order. And then once I'm given the purchase orders, then I will be able to check them for what year for numbering. Yeah, sample purchase orders and confirm linkage to the purchase requisition and the sequence. Yeah, because remember, the PO will not come in isolation. It will come with this purchase requisition. So tie the two, tally the two, cast the two. The two in this case here having, for example, the same amounts and the sequence. Or rather, the details, details, not amount, but details. So blah, blah, I'm requesting for this. And what about the order? Check for supplier confirmation emails. So supplier, the samples you have taken, just get to know their name and get to read their emails. Remember, as an auditor, I'm given access to information that I want. So I'm just trying to test here. I'm bringing in my audit procedures. So we go to sub-process number 3. When we receive goods, ladies and gentlemen, in this case here, when we have this concept of goods receipts, there could be so many things that can go wrong. You may book like you have received goods, but in essence, you only got cartons. Basically, the supplier supplied air to you. So that is something that can really go wrong. We can get wrong quantities. We can get wrong qualities. All right. So what can go wrong in terms of risk? Goods not received, wrong quantity or quality received, purchases not recorded. Yes, this one here, we have received and we have not recorded. So if we have a control objective, of course, the goal will be, we should be able to receive the exact quantity of materials that we ordered. Yeah, to ensure goods are received for all orders, to ensure received items match what was ordered, to ensure purchases are recorded timely. Then the control activity or action, the PO sent to warehouse and attached to goods received note. Yeah, the purchase order before they release. Yeah, we shall be able to send it to the warehouse with goods received note. Another control action, inspect goods. These are the people in the office. They have a control action here. Inspect goods for quantity and the quality before issuing goods received note. This is called goods received note. Goods received note forwarded to accounts for entry and the daily reconciliations of goods received notes via the general ledger. Yeah, via the general ledger. We expect in this case here reconciliations between these goods received notes with what total amount we have in the general ledger. And if possible, that should be done on a daily basis. That is what they have in the company. That is what they have in the company. Now, ladies and gentlemen, from there, I will be able to come in now as an auditor, as Aura and Co. What am I looking at? As Aura and Co., what I'm looking at, ladies and gentlemen, is my audit procedure. So in my audit procedure, I will be able to review all the goods received notes for the signatures and the sequential numbers. Trace all the goods received notes to general ledger. Trace them. In short, are these guys doing what they have said? Is the control working? Are these guys able to tie the amounts to the general ledger? Observe goods receipt process in the warehouse. Just go and strategically station yourself in a place strategically and just see, like, when goods are being ordered, what is happening. Now, ladies and gentlemen, exam tip reminders, very, very important. When we talk of weakness, we are looking at what we call absence of controls. In the absence of controls, what can go wrong? Recommendations, you shall always recommend presence of a suitable, you'll be recommending controls. Sequential numbering, strong control for completeness, all right? Signature approval, key evidence to test for authorization and validity. Then we have something very, very important for you here, a summary. Yeah, summary. This will be very, very important for you. It's all about everything that we have discussed today. Process step, need identification, risk, what could go wrong. Yeah. So in this case here, invalid purchase requisitions, or even these purchase requisitions not processed. Not processed. Control objectives, ensure all purchase requisitions are valid and they are processed. Control activity, authorization by managers. Purchase requisitions are sequentially numbered. The auditor's test procedure, the sample purchase requisitions for approval, check them, sample them and check them. Check sequence. Order placement, purchase order without purchase requisition. That's a big risk, which may make us issue wrong orders. All right. The objective here, ensure that all purchase orders are linked to approved purchase requisitions. And the purchase orders, ladies and gentlemen, of course, we expect them to be numbered. And of course, these purchase orders, they should also be having approval signatures. Yeah. Control activity, ladies and gentlemen, in this case here is to ensure that purchase orders are attached to purchase requisitions, sequential numbering of purchase orders, and then we have here the supplier confirms the order. Yeah, that's a control activity. Supplier confirms the order. For me as an auditor, my work is very easy. Remember, all these are about the organization, what the organization is doing on the other side. For me as a manager, mine is to sample. Mine is to test. Mine is to look at, to review. All right, so sample purchase orders, check all attachments like the purchase requisitions, verify supplier confirmations. Goods received. What could go wrong here? Goods not received. Another item risk here is wrong quantity and recorded purchase. The objective here is to ensure goods received properly and recorded. All right. Then what is the control activity? PO is sent to the warehouse. Inspect goods before goods received note is given. Then the goods received note should so we expect in this case here the accountant here to be doing a lot of work. Review GRNs as an auditor now, trace GRN to general ledger, observe the process, observe the process. So ladies and gentlemen, that marks the end of this interesting session. I'm looking forward to having an